It is a resounding endorsement in the public investment fund's faith in Lucid.
You lost $32,705 per vehicle that you delivered in the second quarter.
You know, when Elon talks about these companies not surviving, I kind of sympathize because there's money they're lighting it on fire.
All that and more. So let's get to it. Tesla stock is up in the pre-market a little over 0.75%, currently sitting at $202.20 per share. For the week, Tesla is down over 10%. For the month, 19%. The real question is, in the short term, will this trend continue? Or will TSLA soar back to 52-week highs? It would appear we're smack dab in the middle from 52-week highs and 52-week lows.
Let me ask first about this cash injection. I think the biggest question investors have is, do you have the money to get through this difficult period and to profitability kind of on the other side? How far away is that profitability on the other side? What's the plan look like?
Maybe a decade plus to profitability? That's only if the Saudi fund continues to pour billions every couple of years to see this company get there. It ain't looking good.
Well, Matt, you're referencing the $1.5 billion that we received from the Public Investment Fund yesterday, which we announced. And this will secure our financial runway well through the Q4 of 2025.
After which, they're probably going to need $2 billion just to continue on with the projects that they have going. The path that Lucid is on at the moment is currently unsustainable.
And this is significant for a number of reasons. First of all, it is a resounding endorsement in the public investment fund's faith in Lucid. I'd like to think they see us as the true technology leaders in this space, and that's a cornerstone of the relationship. And also, we're key to them realizing their Vision 2030.
So, delusion all around. RJ, please tell me Rivian is doing much better, right?
Well, let's get a check on Rivian. Those shares are falling despite beating revenue estimates and posting a smaller than expected loss in the second quarter results, down about 4.5% right now.
Maybe it's not as bad as it seems.
RJ, let's start off with the second quarter, smaller than expected loss. What are you noticing right now in terms of demand for your EVs in the market?
Yeah, we, as you saw for second quarter, our production was down. We made some changes to our production line to update the vehicle for our Gen 2 vehicles. But sales really exceeded what we produced because we continue to sell through our Gen 1 inventory. And we see a lot of excitement for the products. We're really pleased. Even just last week, we saw J.D. Power list us as the #1 brand in their annual appeal study. So we're continuing to see excitement around the product and certainly working to get more of those Generation 2 vehicles into customers' hands.
I do see more Rivians in the Houston area, and that's perfectly fine. I want all EVs to succeed. I've always been of the opinion that other EVs at the moment are not your competition. There's too many internal combustion engines on the road still. But let's be honest, EV is synonymous with Tesla. But it is good to see Rivian getting some brand recognition for all of their hard work. They deserve it.
I got an entire packet here of analyst notes, analyst questions, lots of them. Wall Street wants to know more about this VW partnership, what this looks like, why it's important, why it's happening now, the details around it, and how it's going to change the competitive landscape for Rivian.
And this is something that we've certainly been at work at for a while, and it demonstrates the strength of the platform that we built, the electronic stack, the associated network architecture, and of course the software that's running on it. And we're really excited about the opportunity to take that platform between our electronics and our software and apply them on a global basis to a lot more products and to have that help drive the transition towards electric vehicles.
And that's what it's all about. Obviously, VW's architecture is any help would be welcome. And Rivian obviously needs more money. Call it a match made in automotive heaven, if you will.
RJ, what do you see as the impact of perhaps a slowing consumer Is your customer so high-end and your market share in the position where you don't think it has an effect on you, or does it perhaps make the availability of more affordable options more important?
Yeah, I think it's hard to predict exactly what happens from a macro point of view. Certainly, we're watching it very closely. But as it pertains to our flagship product, the R1, it continues to be one of the best-selling vehicles over $70,000. We see that continue to be the case, and the excitement around the product and what it offers remain. But very importantly for us, as I said before, is R2. And R2 really represents an opportunity for a step change in volume as we introduce something that has a price point starting at $45,000. And that segment really has very little choice. There's a lack of products for customers to choose from that are thinking about electrification. And we believe there's a lot of latent demand that's sitting on the sideline that's continuing to buy internal combustion or hybrid vehicles because there's just not a choice that fits their brand needs or their vehicle package needs.
It would be nice to have a viable option in the $40,000 range other than Tesla. But as Tesla continues to dominate this price segment, it doesn't shock me that Tesla's on to bigger and better things, like opening up the total addressable market with a sub $30,000 electric vehicle. And RJ is absolutely right. Especially in the United States, there are so many EV users on the sidelines right now. But that won't continue in perpetuity. Tesla won't be able to capture all of that market. Somebody else is gonna have to come in and make tons of money. If R2 can reach volume production seamlessly, Rivian has a good chance to remain relevant in the next decade.
RJ, one last question. You lost $32,705 per vehicle that you delivered in the second quarter, and yet you guys are still forecasting a modest positive gross profit during the fourth quarter. How do you get there?
Well, it's the move from our first generation to our second generation vehicle had a bunch of consumer-facing benefits. The vehicle is fundamentally better than what we produced with Gen 1. But importantly, we've talked about this now for a while, importantly, it drove significant cost improvements into the vehicle, both because of changes in the way the vehicle is built, but also in the way that we've set up our bill of materials, how we've negotiated with suppliers. And what we see for the Q2 numbers doesn't have any of these updated vehicles in them. And it also has the challenge of, for roughly a third of the quarter, 1 month of the quarter, our production was down. So we had an inefficient quarter as we made these significant changes to the vehicle, took down our manufacturing line, made big improvements in efficiency. And so we're going to start to see cleaner performance in terms of the new bill of material structure and, of course, the new operating structure, where the plant's now running at a 30% higher line rate than what we had previous to the shutdown.
Does Rivian reach profitability in Q4 of 2024? I'm gonna say no. In fact, I believe it'll take about a year from now before they have 2 consecutive quarters of profitability. That's just my prediction, mainly because this is easy as Tesla makes it look. We're gonna need to see some significant production progress from Rivian. RJ is saying all the right things, and I'm wishing him the best. But it's definitely not going to be easy.
So, George, this is like a tough one because it seems like the vehicles are really popular. They're definitely a major Tesla competitor at this point.
If you say so, guy. If you say so.
And they're delivering 14,000 cars, which is pretty good. But just financially, when Elon talks about these companies not surviving, I kind of sympathize because there's money they're lighting it on fire to make these cars. When does that correct? Like they've got these fancy robotic factories and stuff. Like I thought all of that was supposed to be so that you can make an efficient business, but they're just, doing worse than expected on the earnings.
Yeah. And so, I looked at Lucid. I talked about that one earlier. That one I don't think will be around, to be honest with you.
I tend to agree. Eventually, the Saudi fund is going to say, this juice ain't worth the squeeze, my guy. Something dramatic is going to have to change with Lucid. If not, they're definitely not going to make it to the next decade.
It's just in a dire situation, and they don't have the powertrain commercial vehicle contract that Rivian does. So I think that's compelling for Rivian. Going back just a couple of quarters when I talked about Rivian, they seem to have a legitimate production problem because they seem to be stalled out right around the 50 to 60,000 unit availability. But they have to at least hit that number or then guide higher to increase their scalability, to have any validity in terms of moving the stock in the right direction. Unfortunately, right now, I think the environment that we're in is challenging. I don't think rates are going to come down nearly what they need to help keep a lot of these companies afloat, especially those that are burning money. I'm not saying that's going to be the case for Rivian. I think Lucid is in bigger trouble than Rivian.
How fast they can produce and deliver that next generation R2 platform will determine Rivian's viability, much like Tesla's production of the Model 3. I like Rivian. I really, really do. I would never buy one unless they were able to get the FSD package on their vehicles. This is a prime example of Rivian being an automotive company and Tesla being something much more. In conclusion, Lucid receives another $1.5 billion, and I'm gonna tell you right now, that money's not gonna stretch as far as they think it will. Rivian's earnings were rather mixed, higher revenue growth, yet gross margin, EPS, all of that seemed to be in the dumpster. But unlike Lucid, at least Rivian can see a path to profitability. Having a product that people like and that you're able to mass produce for money, I believe, is the name of the game. It would be a welcome sight to see Rivian join Tesla in that circle. But while everyone is struggling making battery electric vehicles, Tesla is not only just doing it and doing it and doing it well, they're excelling in other aspects of their business outside of automobiles. The energy division is doing exceptionally well. FSD is progressing nicely. If you haven't experienced 12.5.1, I'm here to tell you that that thing is kind of magical. And as Tesla awakens this newly constructed GPU cluster, something tells me this magic will be unleashed not only here in America, but will find its way overseas not too long from now. Lest I forget about the Optimus humanoid robot. Tesla is running laps around the automotive industry and still able to excel in these other ventures. It is no wonder why I'm all in on TSLA. My only question is, how much longer am I going to continue buying this stock at these discounted rates? That's all I got for you today. Be easy. Peace.